Hi, this is Sankar Sharma. In this video, we want to talk about Starbucks. Starbucks has suspended its guidance. Now, that's not a good news. So, should you hold the stock, buy or sell? Let's dissect all the data and come to a conclusion. Hi, welcome back. So, today we're going to go through the entire Starbucks data from a fundamental analysis point of view, from value analysis point of view, as well as from technical analysis point of view. Basically, in summary, we're going to see whether it is worth buying, holding, or sell. If you recall, Starbucks had two major events in its lifetime between 2007 and 2020. Jan 2007, it sold off heavily. Jan 2020, it sold off heavily. And then it recovered for the most part, and it opened a lot of branches, I think a couple of years ago in China, was planning to expand massively. Now what happened? Now the China's footprint has gone down by 14%, while US business underperformed by 6%. So it shouldn't be a surprise that they have suspended guidance. There's been one problem constantly haunting Starbucks. That is management change. You can't succeed a tournament if you keep changing your team, your coach, your jersey, and everything that goes with it. So with Starbucks, the menu's been kept changing. The competition came in, footprints started going down. The management kept changing, which meant the strategy kept changing. There was no stability, and then they had the union issues. So overall, when you don't have a management stability, that is a negative mark. And when management changes frequently, it's a negative mark. And the strategy changes frequently, it's a negative mark. Now, Starbucks had all those negative markings. Now, new CEO has come in. Obviously, if a new CEO takes over, they would want to wipe the slate clean, start with a fresh strategy, fresh vision, and then fix the problems, and then turn around the stock. Now, let's dive in and see when these problems actually manifested, probably how long it is going to take for Starbucks to fix it, or when we should actually consider Starbucks, or what should happen in Starbucks for us to really get excited about Starbucks again. So let's go and check the data. I want to take you directly to cash flow, because I saw this beginning of 2024, Jan 2024. I got concerned. Let me show you the Q1 data here. So if you see this picture, it's quite obvious. There's a big dip of orange bar right here. If you look at that, that is cash from financing activities. Its financing activities taken a deep dive of 2.41 billion US dollars. It had a cash from operating activities, which is 2.38, and it's had a negative cash flow from investing activities, negative cash flow from financing activities. If you put them together, any money it made from its operations has been taken away by the financing activities and investing activities. So that means it's basically run out of the money it's generated there, right there. So that is a situation in Q1. Then it seemed to have got a little bit better. Then quarter three, it's gone worse again. If you look at the numbers, it's cash flow from financing is still negative 650. Investing still negative. Operating activities has actually still continued, but it's not as good as beginning of the year. Now, if you check these numbers through, you can see overall, if you look at the bottom, free cash flow turned negative from quarter two, and it's also negative in quarter three. For us to really get excited, this cash flow figure has to be green for at least 2 quarters. Then we can say, okay, Starbucks had seen the recovery and it turned around. So that is number one situation where actually the trouble started brewing in Starbucks. Now, if you see 2 quarters of positive cash flow, we can then say, okay, this is now good time to go and consider Starbucks. Personally, that is my take. Let's look at the balance sheet. Look at the debt. If anything, kept increasing quarter by quarter. You see, annual net debt remained high and increasing. Now, let's look at these two figures. So assets, that means if tomorrow the company sells everything it has in its pocket, we'll earn 29.45 billion US dollars. At the same time, it has to pay out of his pocket 37.43 it has to close tomorrow. So that is not a good number. The liabilities are higher than the assets. So the cash flow is negative, liabilities are more than assets. That is not great looking balance sheet from financial perspective. Let's look at the income statement. If you look at the income statement, net income kind of positive, that is some relief. That is 2023 figure. So obviously we don't have 2024 there. So here is the 2024 figure. Now, if you look at net income, negative, that's no good. EBITDA growth is negative. So overall, we have issue with Starbucks with regards to its cash flow. Its assets are less than its liabilities, means outgoings are more, incomings are not enough to match the outgoings. So overall, all these numbers suggesting it has got a lot of work to do in terms of turning around the ship. It has to work on improving cash flow. It needs to work on bringing more money. It needs to focus on cutting costs, and it has to streamline its business. It has to streamline its menu, cut down number of items there, cut down waiting times. And also, as one aspect, it has fallen behind with its competitors. That is digitization. Investing in its digitization is less compared to its competitors. It's been slow, and that is also a contributing factor. Because if you think about other competitors, they have all done something very different. If you see the innovation in Chipotle or McDonald's, that is far more fast-paced than what Starbucks has been doing. So there are certain things, and also it has to stabilize its management, leadership, strategy, and focus on the areas where they're bringing in more money. Now let's go and check on the revenue side. So the revenue side, you can see North America is one of its key areas. Internationally is doing well. Corporate and other, there's a problem. Corporate and other, it's seen a big drop as far as 2023 is concerned. So 2024 figure, we don't have to check. We don't have it to check. We don't have it for us to check. But it looks like the China's intake has also fallen drastically. So we have figures only up to 2023 there, and probably will come to the end of the year. Overall, that is not looking good. Let's look at earnings. Again, quarterly earnings is negative. It is forecast negative, which is very interesting. So the surprise has always been negative. The estimates were not met. So the overall surprise has been negative. This is not. If you look at the actual numbers, the surprise element is negative to the negative side. In other words, it hasn't met the estimates of analysts. Now, if you look at the revenue also like looking negative, not met analyst expectations. So overall, it's got multiple negative markings here, right? And these numbers. Only thing they are still doing well is paying their dividends, which is at 2.35%. That's okay. That is to keep the existing investors interested in the company. So overall, if you look at the financials, you look at the value side, they don't look that good. If you look at the P ratio is 27.14, which is making this little expensive. So it operates through these areas. It does beverages, complimented food, packaged coffees, and single serve coffee products, and merchandise through company-oriented stores, licensed stores. So brands include Best Coffee, Evolution French, Ethos, Starbucks, Reserved, and Princey. So reading all that, it started off nicely. It had a stable management and leadership. That was Howard. And then when he moved on, retired, it had a lot of issues. So the leadership that came in, gone out, have caused a lot of strategy shifts. So now for anyone to consider about investing, there are things that we need to see: cash flow being positive, assets that put money in the pocket should be higher than the liabilities. In other words, the outgoings and the incoming should be higher than the outgoings. We should see at least 2 back-to-back quarters of positive net cash flow, net income, net revenue. Should meet earnings expectations or beat earnings expectations, revenue expectations. And at the same time, you should reduce the variety in the shops. You should increase the repeat customer, repeat order value, repeated footprint in the shop. And you should focus on its China activities, because China activities this quarter went down by 14% because of economic slowdown there, and also consumer spending both in US and China seem to have affected. So some of the CEOs are saying that consumer spending a slowdown in their stores. Some are saying that it hasn't made any dent. For example, Coca-Cola CEO said they didn't make any dent in their day-to-day operations, but there are some other CEOs who said, yes, consumer have slowed in spending. Now in Starbucks case, whether it is consumer spending or whether it is their offerings have not met customer expectations, we don't know exactly, but it could be a combination of both, in my opinion. So unless we see 2 back-to-back quarters of positive growth, positive income, assets becoming more than liabilities, a positive revenue growth, income growth, and all that, and cash flow growth, we can't really jump in at the moment. There is no incentive to go and buy this fresh if you're not in this already. Now let's go check the charts as well, just to see what is going on. So this is Starbucks weekly chart. Starbucks weekly charts, it has got 2 scenarios. If they fix problem very quickly, then we can see an upside potential of $106. If they fail to fix it fast, we can see this going down to 86, 83 area, Starbucks price. So if it breaks above this line here, this red, let me zoom in. If it goes above this red line here, and then goes above 99, goes above $100, it's quite likely going to go to 106. Yeah, on the contrary, if it breaks below this green trend zone, it goes below $94, it can quickly rush to 86 and then 83. If it can't hold, it could go even further into this area. So at the moment, it depends how quickly they're going to turn this around. If they can turn it around within a quarter or 2, then there is still hope for Starbucks to do a little bit better and go to 106 level. But if you're not a shareholder in Starbucks, there's no real urgency for you to go step in like this. It's not a buyer, seller, hold recommendation. This is my analysis. Now you can take this analysis and do your own additional analysis on top of this and decide for yourself whether you should buy, sell, or hold. So for I have to invest in Starbucks, I need to see at least 2 quarters of positive cash flow, assets being higher than the debt. I should see earnings beating, revenues beating, at least meeting expectations. And I should see the China numbers improving, US numbers improving. And then I'll be interested. Otherwise, my money could get locked up on a wrong stock. That is what I'm thinking. I'm not recommending you should sell everything you got or you should hold, but this is what I would be inclined to do based on what we saw in the contents. Hopefully that is useful for you to look at Starbucks from a different angle. That is, you got a chance to look at the Starbucks under the bonnet, and hopefully that is helpful. Don't forget to subscribe to this channel, and if you want any other subject to be covered that is relating to trading and investing, let me know in the comments. Leave a positive comment. Don't forget to subscribe. This is Sankar Sharma signing off. See you in the next video. Bye for now.